Question 1. Which of the following is true about the waiting period in short-term disability insurance policies in Arkansas? A. The waiting period is a fixed number of days and cannot be altered based on the policyholder's situation. B. The waiting period in short-term disability policies in Arkansas can range from 0 to 14 days depending on the policy. C. There is no waiting period for short-term disability policies in Arkansas if the disability is job-related. D. The waiting period for short-term disability is only applicable to new employees within the first 90 days of employment. Answer. B. The waiting period in short-term disability policies in Arkansas can range from 0 to 14 days depending on the policy. Explanation. Short-term disability insurance policies generally feature a waiting or elimination period, that is, the time between when a disability occurs and when benefits are paid. In Arkansas, as with other states, this waiting period varies between policies. Common waiting periods range from 0 to 14 days, depending on the insurance provider and the specific policy terms. The purpose of the waiting period is to allow the policyholder to recover a portion of lost income while preventing unnecessary claims for very short-term disabilities. Options A, C, and D are incorrect because they either misstate the flexibility of waiting periods or make incorrect assumptions about their application. Specifically, job-related disabilities are generally covered under workers' compensation, not short-term disability insurance. Question 2. A policyholder, Mr. Thompson, is filing a long-term disability claim after an accident that occurred while he was traveling for work. His claim was initially denied due to a pre-existing condition clause in his policy. Mr. Thompson had an undisclosed back injury from several years ago, but he never received treatment for it. Which of the following is the best course of action for Mr. Thompson to take next? A. Mr. Thompson should accept the denial and avoid pursuing any further claims. B. Mr. Thompson should appeal the claim, providing medical evidence showing that the back injury did not impact his current condition. C. Mr. Thompson should contact a lawyer to sue the insurance company immediately. D. Mr. Thompson should cancel his policy to avoid further complications with claims in the future. Answer. B. Mr. Thompson should appeal the claim, providing medical evidence showing that the back injury did not impact his current condition. Explanation. When a long-term disability claim is denied due to a pre-existing condition clause, the policyholder has the right to appeal the decision. In Arkansas, like in many states, insurance companies often have a pre-existing condition clause that excludes coverage for disabilities related to conditions that existed before the policy was issued. However, Mr. Thompson may still have grounds to appeal by providing medical evidence that shows the back injury did not contribute to his current disability. This could include evidence of the injury being healed or not related to the current issue. Option is incorrect because appealing a denial is often the most effective strategy. Option C is premature and may be unnecessary unless all appeal routes are exhausted. Option D does not address the issue at hand and may result in losing coverage for future claims. Question 3. Which of the following best describes the impact of Social Security Disability Insurance (SSDI) on private disability insurance benefits in Arkansas? A. SSDI benefits automatically reduce the amount of private disability insurance benefits regardless of the policy terms. B. Private disability insurance benefits are never reduced by SSDI benefits in Arkansas. C. Private disability insurance policies in Arkansas may coordinate with SSDI, and the amount of private disability benefits may be reduced based on the SSDI payout. D. SSDI benefits are ignored by private disability insurance policies in Arkansas, and there is no interaction between the two. Answer. C. Private disability insurance policies in Arkansas may coordinate with SSDI, and the amount of private disability benefits may be reduced based on the SSDI payout. Explanation. In Arkansas, as in other states, private disability insurance often coordinates with Social Security Disability Insurance (SSDI). This means that if a policyholder is approved for SSDI benefits, the amount of private disability benefits they receive may be reduced to avoid overpayment. This coordination ensures that the total benefits received do not exceed the policyholder's pre-disability income. For example, a policyholder might receive 60% of their pre-disability income from a private disability insurance policy, but if they qualify for SSDI, that SSDI amount could reduce the private disability payout to maintain the intended total income replacement. Option A is incorrect because SSDI benefits do not automatically reduce private disability benefits without consideration of the policy terms. Option B is incorrect because coordination between SSDI and private insurance is common. Option D is incorrect because private disability insurance typically does take SSDI benefits into account when determining payout amounts. Question 4. Which of the following best describes the own occupation definition of disability in a disability insurance policy? A. A own occupation only applies when the policyholder is unable to perform any job for which they are reasonably qualified. B. Under own occupation, the policyholder must be unable to perform the duties of their specific job even if they can perform other work. C. Own occupation defines disability as being unable to work in any occupation, regardless of the policyholder's training or experience. D. Own occupation refers to a condition where the policyholder is only eligible for benefits if their disability is job-related. Answer. B. Under own occupation, the policyholder must be unable to perform the duties of their specific job even if they can perform other work. Explanation. Own occupations is a definition of disability used in some disability insurance policies, which stipulates that the policyholder is considered disabled if they are unable to perform the duties of their own occupation, even if they are able to perform other types of work. This is a more favorable definition for policyholders compared to any occupation which requires the inability to perform any job for which the policyholder is reasonably qualified. This definition typically provides broader coverage. Option is incorrect because it misrepresents the policy definition. Option C is incorrect because own occupation is more specific and does not require being unable to work in any occupation. Option D is incorrect because own occupation does not depend on whether the disability is job-related. Question 5. Which of the following statements about group disability insurance policies is true? A. Group disability insurance policies are typically more expensive than individual disability insurance policies. B. Group disability insurance policies do not require underwriting, as eligibility is generally determined by employment status. C. In Arkansas, group disability insurance policies are always mandatory for employees to participate in. D. Group disability insurance policies do not provide any income replacement benefits as they only cover medical expenses. Answer. B. Group disability insurance policies do not require underwriting, as eligibility is generally determined by employment status. Explanation. Group disability insurance policies, often offered through employers, generally do not require individual underwriting because eligibility is tied to employment status rather than personal health assessments. This makes group policies more accessible to employees, especially those who might not qualify for individual disability insurance due to health conditions. Option is incorrect because group policies tend to be less expensive than individual policies due to the larger pool of insured individuals and the lack of individual underwriting. Option C is incorrect because group disability insurance is not mandatory in Arkansas. It depends on the employer's choice to offer such benefits. Option D is incorrect because group disability insurance does provide income replacement benefits, although the amount may be lower than individual policies. Question 6. What is the primary purpose of a waiver of premium rider in a disability insurance policy? A. To increase the benefit amount after a certain period of disability. B. To waive premium payments while the policyholder is receiving disability benefits. C. To allow the policyholder to cancel the policy without penalty during a disability. D. To cover the cost of long-term care services during a disability. Answer. B. To waive premium payments while the policyholder is receiving disability benefits. Explanation. A waiver of premium rider is an optional provision that allows a policyholder to stop paying premiums if they become disabled and are receiving disability benefits. This rider ensures that the policy remains active without requiring premium payments during the period of disability. This is particularly useful for policyholders who may struggle to pay premiums while unable to work. Option is incorrect because the waiver of premium rider does not increase benefits, it only suspends premium payments. Option C is incorrect because it does not allow the policyholder to cancel the policy without penalty but suspends premium payments. Option D is incorrect because the waiver of premium rider does not cover long-term care services. Question 7. Which of the following factors is typically not considered when determining the premium for a disability insurance policy in Arkansas? A. The policyholder's occupation and the associated risk. B. The policyholder's age and health condition. C. The number of dependents the policyholder has. D. The waiting period selected by the policyholder. Answer. C. The number of dependents the policyholder has. Explanation. When determining premiums for disability insurance, factors such as occupation, age, health condition, and waiting period are typically considered. Occupation influences the premium based on the risk of injury or illness associated with the job, while age and health condition affect the likelihood of disability. The waiting period also impacts the premium, with shorter waiting periods generally resulting in higher premiums. However, the number of dependents is generally not a factor in determining premiums for disability insurance, as it does not directly influence the policyholder's likelihood of disability or the cost of coverage. Option A, B, and D are all factors that influence premium rates. Question 8. Mr. Lawson is applying for long-term disability insurance. He has a history of high blood pressure, which is well managed with medication. What is the likely impact of his condition on his premium rates? A. Mr. Lawson's premium will likely be higher due to his pre-existing medical condition. B. Mr. Lawson's blood pressure condition will have no impact on his premium as it is under control. C. Mr. Lawson's premium will be waived entirely since he is managing his condition. D. Mr. Lawson will be ineligible for long-term disability insurance due to his high blood pressure. Answer A. Mr. Lawson's premium will likely be higher due to his pre-existing medical condition. Explanation. When applying for long-term disability insurance, any pre-existing medical conditions, such as high blood pressure, are typically considered by insurers during the underwriting process. Even if the condition is under control, it may still result in higher premiums because it could increase the likelihood of future claims. Insurers factor in the potential risk of the condition leading to disability. Option B is incorrect because a well-managed condition may still affect premiums, though it may be less significant than an uncontrolled condition. Option C is incorrect because a well-managed condition does not eliminate premiums. Option D is incorrect because high blood pressure, if well managed, generally does not lead to outright ineligibility for coverage. Question 9. Which of the following is a common limitation of short-term disability insurance policies in Arkansas? A. Coverage typically extends for a period of up to 5 years. B. Coverage generally replaces 100% of the policyholder's income during the disability period. C. Pre-existing conditions are usually excluded from coverage under short-term disability insurance policies. D. Short-term disability policies are not available for employees with jobs considered high risk. Answer. C. Pre-existing conditions are usually excluded from coverage under short-term disability insurance policies. Explanation. Pre-existing condition exclusions are a common limitation in short-term disability insurance policies, meaning that any conditions that existed before the policy was issued may not be covered. Insurers impose this exclusion to reduce the risk of paying claims for conditions that were already known to the policyholder prior to purchasing coverage. Option is incorrect because short-term disability policies typically provide coverage for a limited period, often ranging from a few weeks to a year, not up to 5 years. Option B is incorrect because most short-term disability policies do not replace 100% of the policyholder's income, but rather a percentage, typically around 60–70%. Option D is incorrect because high-risk jobs do not automatically exclude eligibility for short-term disability insurance. However, such jobs may lead to high premiums. Question 10. Which of the following is a characteristic of disability insurance policies that offer a cost of living adjustment COLA rider? The COLA rider allows for periodic increases in the benefit amount to keep pace with inflation. B. The COLA rider reduces premiums over time, reflecting changes in the policyholder's income. C. The COLA rider increases the duration of benefits, providing lifetime coverage. D. The COLA rider automatically converts the policyholder's short-term disability insurance to long-term disability insurance. Answer A. The COLA rider allows for periodic increases in the benefit amount to keep pace with inflation. Explanation. A cost of living adjustment COLA rider is an optional addition to disability insurance policies that allows for periodic increases in the benefit amount to account for inflation. This ensures that the purchasing power of the disability benefits does not diminish over time. COLA riders are particularly valuable for long-term disability policies where benefits may last for several years. Option B is incorrect because the COLA rider does not reduce premiums, but rather increases the benefit amount. Option C is incorrect because the COLA rider does not affect the duration of benefits, but rather the benefit amount. Option D is incorrect because the COLA rider does not convert short-term disability to long-term disability insurance. It only adjusts the benefit amount over time. Question 11. Which of the following is a feature of a guaranteed renewable disability insurance policy? A. The insurer can cancel the policy at any time, even if the policyholder is still paying premiums. B. The insurer can increase premiums only after the policyholder reaches a certain age. C. The insurer is required to renew the policy at each renewal period but can increase premiums on all policyholders. D. The policyholder can cancel the policy at any time without penalty. Answer: C. The insurer is required to renew the policy at each renewal period, but can increase premiums on all policyholders. Explanation: a guaranteed renewable disability insurance policy means the insurer must renew the policy each year as long as the premiums are paid, but the insurer may increase premiums across all policyholders in a specific class e.g., all policyholders in a region or with the same occupation. The insurer cannot cancel the policy as long as the premiums are paid. Option A is incorrect because the insurer cannot cancel the policy unless the policyholder fails to pay premiums. Option B is incorrect because premiums can be raised for all policyholders, not just after a specific age. Option D is incorrect because the insurer, not the policyholder, can raise premiums under a guaranteed renewable policy. Question 12. What does residual disability coverage provide in a disability insurance policy? A. It covers the full income replacement if the policyholder is unable to work for any period. B. It provides partial benefits if the policyholder can perform some but not all of the duties of their occupation. C. It ensures that the policyholder will receive benefits only if the disability is work-related. D. It provides benefits only for the first 3 months of the disability period. Answer: B. It provides partial benefits if the policyholder can perform some but not all of the duties of their occupation. Explanation: residual disability coverage in a disability insurance policy provides partial benefits if the policyholder is able to perform some but not all of the duties of their occupation. This type of coverage is beneficial for those who can still work but at a reduced capacity. Option A is incorrect because residual disability coverage specifically covers partial disability, not full income replacement. Option C is incorrect because residual disability benefits are not restricted to work-related disabilities. Option D is incorrect because the benefits are not limited to the first 3 months but depend on the degree of disability. Question 13. Which of the following is an example of an elimination period ECA disability insurance policy? A. The maximum duration of benefits for which a policyholder is eligible. B. The waiting period between the onset of disability and the first benefit payment. C. The percentage of income replaced by the policy. D. The maximum age at which the policyholder can purchase coverage. Answer: B. The waiting period between the onset of disability and the first benefit payment. Explanation: an elimination period is the waiting period between the onset of a disability and the date when benefits begin. It functions like a deductible in health insurance, with longer elimination periods typically resulting in lower premiums. Option A is incorrect because the elimination period is not the maximum duration of benefits. Option C is incorrect because the elimination period does not pertain to the percentage of income replaced. Option D is incorrect because the elimination period does not relate to the age at which a policyholder can purchase coverage. Question 14. What is the purpose of a free look period in a disability insurance policy? A. To allow the policyholder to cancel the policy at any time during the first year without any penalty. B. To allow the policyholder to review the policy terms and cancel it for a full refund within a set period. C. To provide free coverage for the first month of the policy term. D. To guarantee the policyholder's premiums will not increase during the first year. Answer: B. To allow the policyholder to review the policy terms and cancel it for a full refund within a set period. Explanation: the free look period is a feature that allows policyholders to review the terms of their disability insurance policy after purchasing it. If they are not satisfied with the terms, they can cancel the policy within a specified period, typically 10 to 30 days, and receive a full refund of premiums. Option A is incorrect because the free look period is not about cancelling the policy at any time within the first year, but within a limited period after purchase. Option C is incorrect because the free look period does not provide free coverage. Option D is incorrect because the free look period does not guarantee no premium increases. Question 15. Which of the following statements is true about accident-only disability insurance policies? A. These policies provide coverage only for injuries sustained in accidents and do not cover illnesses. B. Accident-only policies cover disabilities arising from both accidents and illnesses. C. They offer a higher premium than comprehensive disability insurance policies. D. Accident-only policies provide coverage for any type of disability, regardless of the cause. Answer A. These policies provide coverage only for injuries sustained in accidents and do not cover illnesses. Explanation. Accident-only disability insurance policies provide benefits only if the policyholder is disabled due to an accident. These policies do not cover disabilities caused by illnesses, which differentiates them from comprehensive disability insurance policies. Option B is incorrect because these policies do not cover illnesses. Option C is incorrect because accident-only policies typically have lower premiums than comprehensive policies due to their more limited coverage. Option D is incorrect because these policies cover only accidents, not all types of disabilities. Question 16. What does the term occupation class refer to in a disability insurance policy? A. The policyholder's job title, which determines the premium rate. B. A group of occupations with similar risks used to classify policies for premium purposes. C. A classification system based on the policyholder's income level. D. The number of hours worked per week, which affects the policy coverage. Answer B. A group of occupations with similar risks used to classify policies for premium purposes. Explanation. Occupation class refers to how occupations are categorized based on the risk of disability associated with them. Occupations with higher physical risks, e.g., construction workers, are typically classified into higher premium groups than those with low risks, e.g., office workers. Option is incorrect because occupation class refers to a category, not the job title itself. Option C is incorrect because income level does not determine the occupation class. Option D is incorrect because the number of hours worked does not affect the occupation class. Question 17. Which of the following is typically not covered by a disability insurance policy? A. Disability caused by an accident at work. B. Disability caused by a chronic illness such as cancer. C. Disability caused by normal pregnancy and childbirth. D. Disability caused by a self-inflicted injury. Answer. D. Disability caused by a self-inflicted injury. Explanation. Most disability insurance policies exclude coverage for injuries or disabilities resulting from self-inflicted harm or intentional acts. This includes situations where the policyholder intentionally harms themselves. Option A is incorrect because work-related accidents are generally covered by disability insurance policies. Option B is incorrect because chronic illnesses, including cancer, are typically covered by most disability policies. Option C is incorrect because some policies may provide limited coverage for disabilities resulting from pregnancy and childbirth, though there may be exceptions. Question 18. Which of the following terms refers to disability insurance policy that provides benefits for a specific period, e.g., 2 years or 5 years? A. Long-term disability insurance. B. Short-term disability insurance. C. Term disability insurance. D. Limited benefit disability insurance. Answer. D. Limited benefit disability insurance. Explanation. Limited benefit disability insurance provides coverage for a set period, such as 2 or 5 years, rather than for a lifetime or until retirement. This is a more affordable option for those who expect to return to work after a relatively short period of disability. Option A is incorrect because long-term disability insurance typically provides coverage for an extended period, often until retirement age. Option B is incorrect because short-term disability insurance generally covers disabilities lasting only a few months. Option C is incorrect because term disability insurance is not a commonly used term in the insurance industry. Question 19. What is the primary purpose of a recurrent disability provision in a disability insurance policy? A. To extend the benefit period if the policyholder suffers from a second disability due to the same cause. B. To increase the monthly benefit if the disability recurs after a specified time period. C. To reduce premiums if the disability occurs again. D. To provide benefits for a disability that recurs due to an unrelated cause. Answer A. To extend the benefit period if the policyholder suffers from a second disability due to the same cause. Explanation. The recurrent disability provision is a feature in some disability insurance policies that allows the benefit period to be extended if the policyholder suffers a second disability due to the same cause within a certain time frame. This is beneficial for policyholders who experience ongoing or recurring issues from a single injury or illness. Option B is incorrect because it does not specifically increase the benefit amount, only extends the benefit period. Option C is incorrect because the provision does not affect premiums. Option D is incorrect because the provision applies to a recurrence of the same disability, not an unrelated one. Question 20. Which of the following is a primary factor that affects the cost of disability insurance premiums? A. The policyholder's occupation and the risk of disability associated with it. B. The policyholder's age and the expected duration of benefits. C. The waiting period chosen by the policyholder. D. All of the above. Answer D. All of the above. Explanation: the cost of disability insurance premiums is influenced by several factors, including the policyholder's occupation, which determines the risk of disability, age, which affects the likelihood of future claims, and the waiting period, which impacts the length of time before benefits begin. All these factors work together to determine the overall premium rate. Question 21. Which of the following is true about group disability insurance? A. It is typically offered by individual insurers and purchased on an individual basis. B. Coverage is usually more affordable than individual disability insurance because the risk is spread across a large group. C. Group policies provide more customized benefits for each member. D. Group disability insurance is only available for employees of large corporations. Answer B. Coverage is usually more affordable than individual disability insurance because the risk is spread across a large group. Explanation: group disability insurance is often more affordable because the insurer spreads the risk across a large group of policyholders, which can reduce the overall cost for individuals. Option A is incorrect because group disability insurance is typically offered through employers or associations, not individual insurers. Option C is incorrect because group policies are usually less customized than individual policies. Option D is incorrect because group disability insurance can be available to employees of both small and large companies. Question 22. Which of the following is typically not covered by a disability insurance policy? A. Disability caused by illness. B. Disability caused by an accident. C. Disability caused by illegal activities. D. Disability caused by a work-related injury. Answer C. Disability caused by illegal activities. Explanation: most disability insurance policies exclude coverage for disabilities that result from illegal activities or criminal behavior. Options A, B, and D are incorrect because these types of disabilities, illness, accident, or work-related injury, are typically covered by most disability insurance policies, though specific exclusions may apply in certain cases, e.g. workmen's compensation for work-related injuries. Question 23. Which of the following would likely result in a higher premium for a disability insurance policy? A. A shorter elimination period. B. A longer elimination period. C. A higher monthly benefit amount. D. A low monthly benefit amount. Answer A. A shorter elimination period. Explanation: a shorter elimination period, the waiting period before benefits begin, generally results in a higher premium because the insurer begins paying benefits sooner. Option B is incorrect because a longer elimination period typically lowers premiums since the insurer will not pay benefits until a later date. Option C is correct, but it is not the most precise factor compared to a shorter elimination period, which has a more direct impact. Option D is incorrect because a lower monthly benefit amount would typically lower premiums. Question 24. Which of the following is typically included in the lone occupation definition in disability insurance? A. The policyholder must be unable to perform any job to qualify for benefits. B. The policyholder must be unable to perform their specific occupation but may be able to perform other types of work. C. The policyholder can work any other job without losing benefits. D. The policyholder must prove that their disability is permanent. Answer B. The policyholder must be unable to perform their specific occupation but may be able to perform other types of work. Explanation: the bone occupation definition in disability insurance means that the policyholder qualifies for benefits if they are unable to perform the specific duties of their occupation, even if they can perform other types of work. Option A is incorrect because own occupation does not require the policyholder to be unable to perform any job, just their specific occupation. Option C is incorrect because the policyholder would lose benefits if they can perform another job. Option D is incorrect because the bone occupation definition does not require proof of a permanent disability. Question 25. What is a key benefit of adding a cost of living adjustment? Rider took a disability insurance policy. A. It increases the policyholder's benefit amount by a fixed percentage annually. B. It adjusts the benefit amount to account for changes in the stock market. C. It guarantees that the premiums will never increase. D. It allows the policyholder to reduce the benefit amount after receiving payments for 5 years. Answer A. It increases the policyholder's benefit amount by a fixed percentage annually. Explanation. A cost of living adjustment. COLA. Rider adjusts the benefit amount of a disability insurance policy annually based on inflation or a fixed percentage, helping to maintain the purchasing power of benefits over time. Option B is incorrect because COLA does not adjust benefits based on the stock market. Option C is incorrect because COLA affects benefit amounts, not premiums. Option D is incorrect because COLA does not allow for a reduction in benefits after 5 years. Question 26. Which of the following is typically not a reason for an insurer to deny a disability insurance claim? A. The disability is caused by an act of war. B. The disability is related to a pre-existing condition not disclosed on the application. C. The disability is due to a workplace accident covered by workers' compensation. D. The disability is caused by participation in an illegal activity. Answer C. The disability is due to a workplace accident covered by workers' compensation. Explanation. Disabilities caused by workplace accidents are typically covered by workers' compensation insurance, not disability insurance policies. Therefore, the disability insurance provider would not deny a claim for this reason. Options A, B, and D are valid reasons for denial because disabilities caused by acts of war, pre-existing conditions, or illegal activities are often excluded from coverage under most policies. Question 27. What does the partial disability provision in a disability insurance policy typically cover? A. Full income replacement if the policyholder can no longer work. B. Benefits that are a percentage of the total disability benefit if the policyholder can work in a limited capacity. C. Full income replacement if the policyholder is unable to work in any occupation. D. Benefits for injuries that are only temporary. Answer B. Benefits that are a percentage of the total disability benefit if the policyholder can work in a limited capacity. Explanation. The partial disability provision provides benefits based on a percentage of the total disability benefit if the policyholder can continue working but at a reduced capacity. This helps cover the lost income while the individual is partially disabled. Option A is incorrect because partial disability only covers a portion of the income replacement. Option C is incorrect because this describes the situation for total disability, not partial disability. Option D is incorrect because partial disability is not limited to temporary injuries. Question 28. Which of the following is a typical exclusion in a disability insurance policy? A. Disability caused by natural disasters. B. Disability caused by a pre-existing condition that was not disclosed. C. Disability caused by accidents occurring during a policy's waiting period. D. Disability caused by common illnesses like the flu. Answer B. Disability caused by a pre-existing condition that was not disclosed. Explanation. Most disability insurance policies exclude coverage for disabilities resulting from pre-existing conditions, particularly if those conditions were not disclosed during the application process. Option A is incorrect because disabilities resulting from natural disasters are usually not excluded. Option C is incorrect because accidents that occur after the waiting period is over are covered assuming other criteria are met. Option D is incorrect because common illnesses like the flu are usually covered unless there are other specific exclusions related to the illness. Question 29. What is a waiting period of a disability insurance policy? A. The period during which the policyholder must wait before filing a claim. B. The time between when the policyholder becomes disabled and when benefits are paid. C. The time the policyholder must work before the policy takes effect. D. The period the policyholder must remain disabled before benefits are paid. Answer B. The time between when the policyholder becomes disabled and when benefits are paid. Explanation. The waiting period, also called the elimination period, is the time between when the policyholder becomes disabled and when the disability insurance benefits begin. This period helps reduce premiums and ensures that the policyholder truly needs financial support. Option is incorrect because the waiting period relates to the delay before benefits are paid, not before filing a claim. Option C is incorrect because the waiting period does not relate to the policyholder's work. Option D is incorrect because the waiting period is the time before benefits are paid, not after. Question 30. What does a waiver of premium mean in a disability insurance policy? A. The policyholder can reduce the premium amount during the period of disability. B. The insurer will continue to charge premiums even if the policyholder is disabled. C. The policyholder will not have to pay premiums while receiving disability benefits. D. The policyholder is exempt from paying premiums after a certain age. Answer: C. The policyholder will not have to pay premiums while receiving disability benefits. Explanation: waiver of premium means that if the policyholder becomes disabled and qualifies for benefits, they will not have to pay premiums during the period they are receiving benefits. This helps ensure that the policyholder maintains coverage even if they cannot work. Option is incorrect because the premiums are waived, not reduced. Option B is incorrect because the purpose of this provision is to waive premiums, not continue them. Option D is incorrect because waiver of premium applies to disability benefits, not age-based exemptions.